The United States financial system is teetering on the brink. A trillion-dollar surge in debt has pushed 63 banks to their limits, exposing cracks in the foundation of the American economy. These banks, saddled with unrealized losses, are flashing warning signs we can't afford to ignore. Their struggles are a symptom of a much larger problem: America's addiction to debt. This isn't just about numbers on a balance sheet. This is about the financial well-being of every American. This isn't hyperbole. This is the reality we face. The decisions made in Washington and on Wall Street will have a ripple effect, impacting every corner of the nation. Understanding the forces at play is crucial. We need to grasp the severity of the situation and demand better from those in power. Our economic future depends on it. 63. That's the number of U.S. banks currently flagged as high risk due to their precarious financial positions. These aren't small, insignificant institutions. They represent trillions in assets and serve millions of Americans. The issue lies in their balance sheets. They're weighed down by unrealized losses, primarily on securities like U.S. Treasury bonds. These losses, while not yet realized, still sting. They erode a bank's capital cushion, their buffer against future shocks. As interest rates rise, these unrealized losses threaten to become very real. The potential consequences are significant. Imagine bank runs, lending freezes, and a domino effect that cripples the financial system. The stability of these 63 banks is a crucial indicator of the overall health of the U.S. financial system. America has a spending problem. The national debt has exploded, surpassing $31 trillion. That's roughly $94,000 for every man, woman, and child in the United States. The government, hooked on cheap credit, has consistently spent beyond its means. This addiction to debt is catching up with us. The debt-to-GDP ratio, a key measure of a country's economic health, is now over 120%. This means that the U.S. owes more than it produces in an entire year. This level of indebtedness is unsustainable. It limits the government's ability to invest in crucial areas like infrastructure, education, and healthcare. It also makes the U.S. vulnerable to economic shocks. A sudden spike in interest rates, for example, could send debt payments soaring, triggering a fiscal crisis. The International Monetary Fund, or IMF, the world's financial watchdog, has sounded the alarm. They've warned that America's ballooning debt poses a significant risk to the global economy. This isn't just an American problem anymore. The IMF has urged the U.S. to get its fiscal house in order. They've called for a combination of spending cuts and revenue increases to rein in the debt. Failure to act, they warn, could have dire consequences, not just for the U.S., but for the entire world. A U.S. debt crisis could trigger a global recession, upending financial markets and causing widespread economic hardship. Those who cannot remember the past are condemned to repeat it. This adage rings especially true in finance. The current situation, with its toxic mix of excessive debt and fragile banks, has uncomfortable echoes of past financial crises. The 2008 financial crisis, triggered by a subprime mortgage meltdown, should serve as a stark reminder of what can happen when risk is ignored. We seem to be on the verge of repeating past mistakes. The warning signs are flashing red. Yet there's a sense of complacency, a belief that it can't happen again. This time isn't different. The laws of financial gravity still apply. The precarious state of America's banks and its mountain of debt might seem like abstract concepts, but they have very real consequences for everyday Americans. The ripple effects of a banking crisis or a debt crisis would be felt in every corner of the economy. Imagine this: you go to your bank to withdraw money, but there's none left. Your credit card gets declined. The value of your retirement savings plummets. These are just a few of the potential consequences of a financial meltdown. Your job security, your ability to make ends meet, your financial future, all are at risk. This isn't fear-mongering. This is the reality we face if we continue down this unsustainable path.